should we be concerned about BlockGreen's new product offering where a marketplace was created for Bitcoin miners to sell future hash rate production to accredited investors? And those accredited investors would provide BTC. Welcome back, everybody. All right, we're going to dive into this BlockGreen product, and I just want to start off by saying this clip is not about Dylan. It's specifically about the product. It just so happens it's because he's an advisor to them, newly joined as an advisor, and he's the one that put out this tweet thread. So, I started asking him questions about this, so we're going to dive into it. BlockGreen has created a marketplace for Bitcoin miners to sell future hash rate production, denominated natively in BTC, opening up financing options during bear markets and enabling risk mitigation strategies in a bull market. I'm excited to be joining as an advisor. So I just want to preface this, right? It has nothing to do with BlockGreen, but unfortunately, every single product that I have seen where you put up your Bitcoin as a collateral usually doesn't end up well. If we take a look at BlockFi, we take a look at Celsius, we take a look at shitcoin things like BitConnect, like Daver coin. Unfortunately, the list goes on. And then, of course, you have the what they call high yield investment products, or HYIPs, which are just utter frauds. So I responded back and said, shaking my head, dude, you know how this ends. Sad to see this. And I just took a screenshot from the BlockGreen website, liquidity, BTC in, BTC out, access secured opportunities to deploy your Bitcoin and earn attractive and scalable returns. 2, streaming returns, get synthetic hash rate exposure along with other Bitcoin liquidity strategies. And 3, know your miner is our proprietary framework for selecting miners with strong fundamentals and sound financials. Now, we'll see later on this. It's a KYC process for miners. So... All right, so Dylan responded to that and said, it's an institutional product for firms already undergo extensive audits and underwriting procedures. The same process is undertaken if you want to raise debt or equity capital in a traditional form, which absolutely is true. This isn't for someone mining Bitcoin with an ASIC in their basement. I can't disagree with that. So I responded back and I said, why do they need our Bitcoin? And again, I took a screenshot from the BlockGreen website, and this is, how to deposit and withdraw your Bitcoin. Onboard, wallet creation, BitGo, send Bitcoin to BitGo wallet, fund opportunity, withdraw Bitcoin from BitGo wallet to an external wallet. So then Dylan responded back, and I mean, this is good because I'm also trying to learn as well. Like, I'm not pretending like I'm like the knower of all things. I'm very skeptical of this just because of what I've seen. And also we shouldn't forget what happened with Compass mining as well, right? Which I know these are not the same things, but they're not so different. Right? Because at the end of the day, they're asking you for your Bitcoin, So I get it that it goes to accredited investors, but it's not to say that all products that go to accredited investors are all legitimate necessarily. Anyways, so Dylan responded back and goes, hope this helps to clarify the process. Let me know. He goes, there's 2 sides of the equation. Miner collateral. Okay, miners are selling future hash rate production at a discounted rate in exchange for upfront liquidity. When receiving upfront liquidity, miners post collateral in form of BTC on-chain and or off-chain collateral in the form of a claim on the holding company of the mining firm receiving liquidity. And 2, liquidity providers, the buyers of the future hash rate production. After finding an agreement upon middle ground, price to purchase future hash rate production, liquidity providers provide BTC to the mining firm, with the miner streaming BTC back to the liquidity providers, that's what LP stands for, over the agreed upon term based on how much hash rate the LP purchased. The risk for the LP is based on the uncertainty of the future network difficulty plus the operational execution risk for the miner. So then he further responded back and said, and was quoting my original response, why do they need our Bitcoin? He goes, well, because this marketplace for future hash rate production is denominated in BTC terms is the simple answer. If it was quoted in USD terms and settled on Swift instead of natively on-chain with BTC, that would be preferred, ? So, I mean, I get where he's going with this. So then I responded, so far, in every instance where a person provides BTC and gets yield, if and when the venture blows up, they only get their nominal USD value back at the time, not their Bitcoin, or in some cases, nothing. And then I asked, can we purchase this product using USD? can an accredit, because and this is the part I don't necessarily understand, because at the end of the day, these miners are, if I understood correctly, like they're trying to access liquidity today based on their hash rate tomorrow. So they're trying to extract funds now that they're already, these miners are already getting paid in BTC for mining. So, and they have to convert it to whatever local currency in most cases, depending on how they live, right? I'm trying not to assume everybody's life, but it's like, to a certain extent, I imagine that there is a pretty decent number of miners out there that are just, that are just transacting in their local currency for day-to-day things. So I just imagine that, why wouldn't this just be done with USD? Like, why does it have to be collateralized with BTC? Anyways, and again, it's not to say that it's sketchy, but it's just, I don't exactly get it, because the miners already have Bitcoin. So they want more Bitcoin now. I mean, I guess everybody wants more Bitcoin now. Okay, well, let's continue. So Dylan responded back and said, it's not yield how you are imagining it. Blockgreen doesn't pay out any yield from their coffers. There is no flat rate BTC yield available or offered, which is true. The thing for me that stuck out, though, was the daily payouts. That, to me, is just another red flag. And again, it's not to say that things that pay you out once a month can't be scammy. There's things that can pay you out once a week that are scammy. It doesn't mean that. For me, any type of thing like this, it just always throws up red flags, because it's like, how do they have that liquidity constantly on hand to pay you out daily, regardless of what happens, right? So one thing that I did see is that I'm not seeing guaranteed yield or guaranteed this or guaranteed that. So that does make me feel a little bit better. The marketplace is just a place for buyers and sellers to come to agreement on terms for purchasing future hash rate denominated in Bitcoin terms entirely on Bitcoin rails. It's over the counter with terms unique to every seller. Riskier miners, i.e. higher cost power, less efficient rigs, worse balance sheet, poor jurisdiction, have to sell future hash at a greater discount, which on the other side compensates the buyer, the LP investor, with greater potential return, or gasp. That's a shot at me. Yield in BTC denominated terms for the future hash rate. Yes, I'm sorry. The second I see anything that looks like yields, yeah, the flags go up. Similar to how investment-grade companies can raise debt at lower yields than junk-rate companies, certain miners will be able to sell future hash rate at a lesser discount than others. Miners post both BTC collateral on-chain and give a claim to their holding company's assets in an agreement in the case of a default on the terms. Agreement denominated in future petahashes on the one side and BTC on the other. Every deal is unique. I guess every deal is entirely unique in its pricing and terms. It's not just a cesspool yield product as you're imagining it. So then I responded back, I appreciate you taking the time to explain this. I just don't get why these miners, poor as they are, need to receive your BTC in order to provide access to this revenue stream. And he goes, I guess I'm confused with what your question is. He goes, your BTC is what the miners receive for pledging their future hash rate to you over the agreed upon term. And then they stream the BTC back to you based on the fruits of their hashing. It can be used dually as a tool for raising capital up front that otherwise wouldn't be accessible, as well as hedging future revenues in advance as traditional commodity producers do. Oil producers, gold producers, corn producers all hedge future revenues out in advance. Yes, of course. This allows Bitcoin miners to do the same, with hash rate being the commodity and BTC being the payment rail and denomination. I get it. I just don't trust it. That's all. I responded back to that one. And I said, the miners are selling discounted hash today because BTC fiat exchange is not desirable at the moment, right? Like that's the key. They're trying to shore up funds. They don't want to sell their Bitcoin at this lower price. That's what I imagine. Anyways, so I guess I'm confused why an investor would need to provide BTC for future hash the miner is attempting to monetize to pay bills, expand, etc. today. So Dylan responded back and said it has little to do with the fiat calculation or speculation on the USD direction. Future hash production is discounted because miner execution operation risk, revenue variance, hashing revenue is probabilistic, unknown future path of mining difficulty. Also, disclosure transparency on miner operations is meant to make these risks as quantifiable as possible. So buyers and investors can attempt to fully discount the risk. Calculations are BTC hash rate native. The unknown unknowns are the reasons for the discount. I get that. The more perceived risk, the wider the discount demanded by the buyer liquidity provider, or they simply just don't buy the future production at all. He finishes by saying BTC USD exchange rate does, however, have a large impact on miner margins, which, 100%, which would change whether or not they are looking to access liquidity at all, or instead, potentially, if they are at all interested in hedging out revenues. Imagine if some of the miners hedged during the mania in 2021 instead of doubling, tripling down on BTC ASICs, BTC ASIC collateralized loans. It's entirely their choice as to whether to make that decision, but the point is that they now have that optionality. Okay. I mean, look, to me, these are fair points. Again, I am not claiming to be an expert in this. It's the whole thing about putting the BTC on a third party platform. Don't get me wrong. In this case, they do claim that it is a multi-sig, so that again offers some degree of security. So if we go take a look at the Block Green website, here's their website. This is specifically the liquidity section, right? The liquidity section. So here we go. Scalable returns. Our platform unlocks opportunities in Bitcoin infrastructure, providing access to attractive yields denominated in Bitcoin. See, it's that word. It totally gets me. Like I can't, like now it's like, it doesn't matter what anybody else said. Now I see the word yield. There you go. Secured pools. Our opportunities are secured by both on-chain and off-chain collateral. Additionally, we have an adjustment mechanism in place to account for any missed hash rate deliveries. Daily payouts. Again, I told you that for me is just a red flag. The Hashrate product offers liquidity providers direct exposure to hash rate and its corresponding rewards, resulting in daily payouts. And vetted miners. Our partnership includes some of the world's best miners, selecting through a stringent know your miner process that screens for financial health, sustainability credits, and operational quality. So here we can also see the funding flow from liquidity providers. And here we go, opportunity selection. Miners join the platform by submitting essential know your miner, or essentially it's just KYC for miners, information including financials, operational data, energy sourcing, and strategy. Access to KYM report. Liquidity providers gain access to the KYM report for each opportunity. This report contains due diligence material provided by the miners, along with the credit scoring issued by the protocol. I'm guessing Block Green wrote that protocol because this is their the Know Your Miner framework is their own proprietary thing. Liquidity allocation. After due diligence, liquidity providers entered into mining rewards streaming agreement with miners through the designated opportunity. Funds release. Once liquidity is allocated across opportunity tranches, miners receive notifications to post collateral and direct the hash rate. Following these steps, liquidity is released. The protocol and the reward reception. The protocol actively monitors the supplied hash rate and distributes daily rewards to liquidity providers. They don't have a white paper, they have a light paper. And I just picked out a few choice sections to look at. The first one here is, how is the contract secured? Okay, so the collateral. On-chain collateral denominated in BTC deposited by the miner in a multi-sig wallet over the duration of the agreement. Then there's the claim on assets. In case of default, the agreement is secured by a claim on the assets of the holding company. And then insurance. The miner is required to have insurance coverage events that may cause disruptions in the operation of the mining site. And I mean, I'm guessing Block Green is reviewing those insurance agreements. Or part of my question, to Dylan was how to deposit and withdraw the Bitcoin. So again, you are indeed sending your Bitcoin to this third party platform. But again, like I just read to you, there's a claim that it's using a multi-sig. I have a very hard time with any of these products. People, we tend to have a short memory. And again, I know it's not the same product, but if we take a look at BlockFi, BlockFi built itself up during the bear market, and they got a lot of funding during that time. The way I'm looking at it is like this. Right now, Bitcoin is below 30K fiat BTC exchange. And that bothers some people. And of course, it's an opportunity for some, right? And when you see something stagnant for a long enough time, you see something just do nothing for a long enough time, you know, it's that meme, do something, right? And then you start to think that you need to be doing something with your Bitcoin, you know? So these people, right, these companies, they come along and they show you these products that provide this opportunity, right? You just have to trust them a little bit. You just got to trust them a little. Now, in this case, there's a multi-sig, right? So it looks a lot better. I'm not saying that this is going to be a rug pull or anything like that. For me, this is much more of like a, it's like a concern clip. You know, I've known Dylan for a long time. I don't think he's a scammer, you know, like, but I think that this product, not understanding it as well as I probably should, but still raises some red flags to me. You know, like I know he said that it's not yield in the traditional sense, but somehow they're able to pull together daily payouts. And when you go on the website, they mention yield multiple times. And the other question is that, you know, why do they only take BTC? And I know it kind of sounds like hypocritical, right? You'd want them to take BTC. But the reason why I'm thinking this is because every other product that has done this has rug pulled everyone. So, you know, it's just, I can't, anyways, guys, look, you know, like we always, like we have to say, right? This isn't investment advice and all that crap, you know, because people can't take personal responsibility. But look, I personally, look, I'm going to stay away, and, you know, maybe I'm going to have fun staying poor by doing so, but so be it. I don't understand it, right? I don't get it. To me, it just doesn't seem entirely correct. I obviously, you know, wish him the best. But, you know, time will tell. Anyways, guys, that does it for today's video. Don't forget to like and subscribe. I will catch you all next week.